Hey, hello, good people. We are the Tech Behind FinTech. Happy Friday. Thanks for tuning in as usual. My name is Nnamdi Osuagwu. I am the host of the Tech Behind FinTech. We talk about the technology behind the money. Today, we're going to cover some news articles, some interesting things happening. Then we will call it a day and wish everyone a happy weekend. Okay, where do we start? Give me a second. Let's get everything set up. The comments are ready. Okay, let me add this to the broadcast. All right. First news article of the day we want to cover. Let me just get all my positioning right. Second, guys. Okay, interesting one here. So, First United Bank and Trust taps Finotta for personalized mobile banking. Finotta has been selected by Oklahoma's First United Bank and Trust as the firm looks to provide its digital banking customers with personalized banking services. I mean, that's what we see, right? A lot of these traditional, like legacy banks, are looking to get their customers on a more digital experience to mimic what fintechs are delivering. So we're seeing a lot of partnerships in that space. Finotta's platform allows its financial institution customers to leverage data and insights to create and deliver personalized and customizable mobile banking interactions and solutions. These personalized banking experiences increase customer loyalty and engagement and create a new revenue stream for financial institutions in a mobile first world. Interesting to note, another pattern that we're seeing, right, is that alongside the partnership, First United Bank and Trust invested $3 million into Finotta's seed round at the end of last year. So they're not only partnering with them, but they're also an investor. First United Regional Bank's president Ryan Suchalo, hope I didn't pronounce the name correctly. This partnerships with Finotta will support its First United vision to elevate 10 million lives by the year 2030. First Union Bank and Trust is a $12.5 billion privately held bank headquartered in Durant, Oklahoma, offering personal and commercial banking, investment management, insurance, and mortgage products. So listen, guys, we're going live on right now. We're live on LinkedIn, Facebook, YouTube, and Twitch. And then on a side channel, we're live on Instagram. A friend of mine just joined. Shout out to Charlie Lee. Thanks for joining on Instagram. If you want to see the screenshots and the presentations that we're showing, the Instagram users go. We pin the Tech Behind FinTech. You can watch the show live from one of the other streams, and you'll see the full show. Instagram right now, you're seeing more behind the scenes footage. All right. On that note, let's move on. Also, if you have any questions, post it on the YouTube channel for the Instagram followers or the other streaming options on the Tech Behind FinTech you will see. And we'll post your question up and try to answer it. All right, what's the next one that we have going on? Okay, all right. Everyone is seeing what's happening right now. I mean, if you're following crypto markets are like totally down. But the Fed, it's interesting too. Like it's obviously all relating to what happened with the Fed and interest rate hike. So the Dow also lost 1,000 points on, they said, the worst day of trading. I think that was yesterday. Let's go to the show notes and let's talk about that. So yeah, so I mean, in the crypto market, Bitcoin's like the leader, and every other crypto, every other currency, you'll start seeing the downturn. But usually Bitcoin drives the market. So and you'll see the shift with Ethereum as well. So BTC and ETH price imploded towards swing lows as the Dow tumbled by 1,000 points, and the Nasdaq lost 5%, marking the worst trading day. That was yesterday. Global financial markets has plunged into disarray on May 5th as the Dow Jones saw a 1,063-point drop and Bitcoin price plummeted to 35,000. I mean, last year we saw Bitcoin as high as 60 something, right? So right now, all through the markets are trading low. As we know, Federal Reserve increased With the federal increase the cost of borrowing by raising its federal funds rate by 0.5% on Wednesday. Is the largest hike since 2000. The rate is now in the range of 0.75 to 1%. So, that's obviously, I mean, we're going to, I don't want to drill too hard into that, but obviously, as interest rates go up, that impacts borrowing, right? So, credit cards, mortgages, loans, different things like that. We see how it's going to affect the housing market, but we kind of focus on the technology. I'm not going to dive into that, but it's interesting to see how all of the other markets was impacted by this, from the crypto market to the stock market. Obviously, with rates, I think we're going to obviously see some things happening in the housing market. But hey, Kevin just joined on Instagram. What's up, brother? Okay, moving on. See any questions going on right now with that? It's not. So we're going to move on to the next article. BitMEX. So founders ordered to pay $30 million in civil penalty. The three founders, I got hit with $10 million each. BitMEX is a cryptocurrency exchange and derivative trading platform. It's based out in Seychelles. That's in East Africa and the Indian coast. It's an island. The Commodities Future and Trading Commission filed suit against the exchange and its three co-founders on October 1st, 2020. In the rundown of the conclusion of the case today, the commission stated that the defendants were accused of operating the BitMEX platform while conducting significant aspects of BitMEX business from the U.S. and unlawfully accepting orders and funds from U.S. customers to trade cryptocurrencies, Bitcoin, Ether, and Litecoin derivatives. So they got hit with a fine, but it is still up. They're still doing their thing. The CEO, Arthur Hayes, Benjamin Delo, and Samuel Reed were each fined $10 million in consent payments, according to the statement from the Commodities Future Trading Commission at the conclusion of a court battle on Thursday, in which the CFTC said they violated aspects of the Commodity Exchange Act and CFTC regulations from November 2014 to October 2020. So that's what's going on with BitMEX. BitMEX. All right. Let's see what's going on here. And like I said, today might be a real quick show. Last, want to get into ransomware payments. So, try to get into like a security article or security topic. The last article of the day. So on the ransomware, there's a company called Coveware that conducted some analysis, and based on the analysis, very interesting stuff. So based on thousands of cases on which it has worked, Coveware says the number of ransomware hit victims who paid a ransom declined from 85% in the first quarter of 2019 to 46% in Q1 this year. So what does that mean? Essentially, less people are paying. So it was really high in 2019, and now we're seeing that it's a decrease. That doesn't mean that we're out of the gates. I mean, ransomware is still happening. And the chart that I posted, so my Instagram people, you can't see the charts that I posted. If you want to see the live show, Tech Behind FinTech.com, and also on YouTube, so you can kind of see what's going on with this chart, and we could just watch. Let me big it up so I can kind of get a clearer picture on it. Second. Yeah, so we see that it was 85% in Q1 2019 of the victims who paid. That doesn't mean it's 85%. I mean, ransomware is still going on. It's just less people are actually paying the people that are attackers. So it declined from 85% all the way down to 46% as of Q1 22. That means they still were attacked. They just didn't pay the actual the ransomware. And that's a lot. I mean, right now we saw that authorities are oh wait, I think we sorry about that to my YouTube people. Let me share that again. I think I dropped the share it off. Okay, we're back. Authorities are on it. Like you're seeing these payments getting tracked. So it's not, I mean, it's one thing to actually commit the crime, but it's another thing to get away with it, right? So even if you get paid from it, I mean, the one thing about having, putting all those payments on a blockchain is that it's traced, and authorities are getting better at tracking that down to who's getting paid. So that could, a lot of that could factor into the decline of people paying. So it's another thing to note that Covesware's findings stand in contrast to a recently released study from Sophos. And I think we talked about this, which noted that the number of organizations that self-reported paying a ransom had increased from 2020 to 2021. We actually did cover this a few weeks ago, but that study was based on a self-reporting survey, whereas Coveware's findings are based on actual cases. They said when victims do pay the ransom in Q1, they paid an average of $211,529, down 34% of the previous quarter. Cobra found it attributes this to fewer victims paying, attackers overall infecting small organizations, given that law enforcement fallout they often face after hitting, after hitting a very large business, as well as the erosion of established ransomware as a service brand. So, a few things. So they're going after smaller shops, right? Because, the full weight of the law and more resources are thrown at you for the bigger organizations, and smaller shops pay less. So that's another reason why they say that the payments also are lower. It's important to understand a few things. Well, let's go over some tips. Look, although this number decreased, that does not mean firms are still not getting exploited. And actually, more smaller firms are getting exploited. They have less resources. A few things. Phishing attacks. Obviously, you get this email, you click on something, and something's downloaded, and someone can kind of gain control of your machines. Compromising remote desktop protocol connections to dominate. So, we're all remote right now, logging in using services as RDP. So just having, some strong security around that. Exploiting software vulnerabilities. This is like one of my pet peeves, right? It's like, it's such a low hanging fruit. And I people who work with me know this, and that's like, I'm always on that. I'm like, look, it's nothing for us to update our software. You see those patches that come out for your operating system, for software that you use for your browser, guys, it is critical that you update this stuff. It is as simple as just clicking a button. Maybe you might have to restart the application. Maybe you might have to restart your computer. So worth it. It's low hanging fruit. It's not even, you don't have to be like a technology genius to actually implement that, but it is so important because these things are how systems get compromised, and you're putting your company or yourself at risk by not keeping the latest updated patches. Another one is social engineering attacks, been noticeably increasing. So, that's always, people target you and use things that they use things that may be personal to you, and just try to figure out ways to basically trick you into getting access. We've seen cases like that in which domain registrars were called, and the guy was pretending to be, the attacker was pretending to be an employee and so forth, and gain access. So just having controls. With social engineering, that really breaks down the controls and protocols that you have in place, so that people cannot pretend to be your staff and so forth, and call some of your vendors. And also, I mean, the craziest ones that I've taught to, I've been involved in which people have told me, in which, someone's calling, pretending to be you, hitting a vendor up, asking for a payment, or just ridiculous things that just, that to prevent it is just a phone call. Cool. I got an Instagram comment. A guy, Shad knows loans, my guy. Good points. Keep it fresh. Keep it updated. Yeah, thank you, brother. Appreciate that. Yeah. So that, and next, right, what we see, training. Training is always important. Training both your users and your IT help desk. He said, as well as blocking the installation of legitimate but unimproved remote tools like TeamViewer, Log Me In, and GoToAssist. So, sometimes you have situations in which your help desk or help desk resources will use certain tools to gain control of your machine so that they can get remote access to help you out. but some of these tools can actually be used by the attacker. So that's something to look forward. That's something to look into. Have a comment from the audience. Let's go. I got Charlie Lee. Okay. Let's read this out. So increasing from Charlie Lee. Thanks for the comment. Also, guys, I really appreciate the viewership and I appreciate all comments. It just keeps the conversation lively. So just want to say that. Okay, increasing tech debt often prevent companies from doing those type of simple software update activities, which exacerbate the security holes you speak of. Listen, 100% agree. I mean, and thanks for mentioning that, Charlie. I mean, listen, how should I put this? We all know what debt is, right? Like you have credit card debt. I mean, what's big on the news right now, college loan debt and so forth. There's a concept, same thing, right? On the same premise, but technology debt. What does that even mean, right? So essentially, when you have your infrastructure, you're building a product, you may come across situations that you may ignore. You may go, you know what, we'll kick that down the bucket, or we can't fix that now. Or, we know this is a hole, but this can't be addressed. We got to put it off. That is technology debt. The more you do that, like same thing with bad spending habits and credit cards, the debt increases, and the interest that you pay are these types of issues, like it's potential vulnerabilities, potential things that could happen down the line. So that's all, because sometimes people might understand what technology debt is. So I just want to kind of give that correlation. This Charlie has another comment. Love it. Keep it coming. They don't want to make application changes and remain on older UI frameworks, etc., that prevent updating certain infrastructure. Or so 100%, man, spot on, right? I look at it like this, and I've had these conversations with executives. Pay now or pay later, but at some point, the debt has to be paid. That's just the bottom line. Now you can be proactive with it, right? But like as Charlie's mentioning, right? Like if you have certain things in your underlying framework, is going to be expensive to make these changes. But look, or you can play the block mode. You can say, you know what, it's going to be expensive. Is this comment that Charlie made to update our full application, update the entire framework? So you know what? Let's put that in our risk register, document that as a risk, and let's see ways that we can just block things, whether you're using a web application firewall or some type of preventative methods from people getting in. You have certain controls around it. And then you go, you know what, we're going to then address the technology debt and the iterative approaches over time. Look, all that is fine. It's just that the biggest issue is having this debt and not understanding your risk, not documenting your risk. And essentially, you're just like flying blind there, right? You're like, you kind of have to document it as a risk in your risk register, and then say, okay, how are we going to mitigate this? And or how are we going to deal with this? I mean, ignoring it totally is just not a viable option. Good points, Charlie. Really appreciate the comments. All excellent points. I'm happy you brought that up. All right, so what are we talking about now? So the last thing that we were seeing in this whole thing with ransomware, this one always I always found this one very interesting. Ransomware as a service. So it's like, because you have everything as a service right now. You have software as a service, you have this as a service, that as a service. But ransomware as a service typically involve operators who develop and supply their crypto locking malware and affiliates of their business partners to affiliates, and who take the malware and use it to infect victims. So essentially, what it is this organization creates the actual the malware, whether a crypto locking malware. They're the brains behind it, and they just basically say, you know what, we're not going to attack you, but we're going to get people who are affiliates or business partners to sign up. They're going to then get our software or malware in this case, and then they're going to attack. And then when the ransomware is received, the affiliate will get 70%, where the rest go to the operators. I just always find that fascinating. But that's definitely a trend. Another trend that Cobra says is the shift from big game hunting involving crypto locking large projects to big shame hunting, in which attackers do not encrypt data, but instead steal and threaten to release it. By doing so, they can still extort victims. Look, at the end of the day, they just want to get paid, right? That's it. The method of getting paid is totally, it's whatever that they could do. At the end of the day, they want to get money. Whether they're going to get money by locking down your systems and demanding payment, or they're going to get money by saying, you know what, we're going to release it to the public and impact your reputation. But all of it is a form of extortion at the end of the day. As that highlights, ransomware wielding attackers have continued to test new ways to pressure victims into paying. Like what I just said, right? Such innovations have included using double extortion, stealing the data before leaking systems, and then threatening to name and shame victims and leaking their data. Another one, some groups have distributed denial of service attacks against victims who do not quickly pay. Get this one. Others contract with outsourced call centers to call victims demanding payment, or sometimes call their customers to try and publicly shame them into doing so. Look, it's just, innovation is happening on the criminal side, and innovation is happening on the on different aspects. So it all depends on how you look at it. Like I said, I'm more so fascinated by it. Despite the reported reduction in the number of organizations that paid a ransom and the reduction in average amount being paid, it's not a quick resolution. I mean, for ransomware, I mean, I think it's here. I mean, you have the good actors and the bad actors all finding ways to innovate, and it's a constant tug and war. Okay, got more people joining Instagram. Hey, doing some Instagram waves. Okay, let's stop doing that. All right, so that is today's show. Listen, shout out to everybody who joined. Shout out to my man Charlie Lee for the great questions and the commentary. And sometimes with those types of questions, it'll try to jar my mind up and like, oh well, yeah, we didn't cover that. We could just like dive into that. It's a lot of information, guys. Okay, well, that is today's show. I usually give it a minute or two just for some extra comments, because I think we're like 30 seconds or 15-second delay from when I talk. And sometimes when I end it too early, I miss a comment that I could answer. So I'm just going to give it a second to see if anybody else has any additional comments or questions before we close out for the day. In the interim, while we wait, visit the techbehindfintech.com. That's our website. We have live streaming there. We have a plugin to YouTube where you see the live streaming there, and we have links to all of our platforms where the show is streamed. So definitely add that to your favorites. We'll appreciate it greatly. And yeah, I think so. I think we don't have any questions, and I think that is it. Guys, thank you for your time today. Thank you for tuning in. Once again, my name is Nnamdi Osuagwu, the host of the Tech Behind FinTech, and that concludes today's show. Take care. Cheers.